Okay, cool. Hi, everyone. Today is actually a pretty short webinar, getting ready for next week's, which is a much longer one. So I'll just dive right in. So last week we gave a brief overview of technical analysis and how to get the Autochartist plugin for MetaTrader. You go to the Kwakol Markets website, you click on Trading Tools Autochartist, and here there's a link to download the plugin. This takes you to a website where you can watch a whole bunch of little tutorial videos, but you can also download the plugin. There's a button, and then you go through this normal setup process to install the whole thing. I'm not going to run through that again. You can watch last week's webinar for that. So today we're diving straight into the content of the webinar. I did mention last week that we were talking about risk management today. So I got it all wrong. Again, it looks like everything is against me in this webinar. Next week's webinar is about risk management. This week's webinar is around which trades to choose, right? So when you drag and drop the Autochartist Expert Advisor onto your chart, it comes up with a whole bunch of trading opportunities, right? And so the big question is, okay, I've got 1.5 pages, close to 2 pages of trading opportunities. Ilan, which one do I choose? So hopefully today I'll clear up some of those questions, right? Because that's always the number one question. Hey, which are the best signals? So the first things first, I have to make the legal team happy, and I have to tell you that past performance may not be indicative of future performance, right? We're going to be talking a lot about statistics today. And, I always tell this funny story, but it's very, very important to remember the story. It's not a funny story. It's actually a fact, but important to remember this anecdote. When somebody says to you, there's a 70% chance of rain tomorrow, what does that mean? Does anyone know what that actually means? If you know what that means, type it in the chat window or type it in the questions and answers. If someone says to you, there's a 70% chance of rain, no one knows what that means. It doesn't actually tell you if there's going to be rain or not tomorrow. In fact, even if someone said to you, there's a 95% chance of rain or 100% chance of rain. Okay, so I've got Emmanuel, Tatu, Akeem. You're all wrong. All of you are wrong. Can you believe it? It doesn't tell you there may or not be rain. It's not a forecast. It doesn't tell you, Akeem, good try there. 30% chance that there won't be rain. Okay, so let me tell you what it actually means. When someone says to you, there's a 70% chance of rain, it means that in the last 100 times when the atmospheric pressure was X and the wind was Y and the cloud cover was Z and the temperature was something else, it rained 70 out of 100 times. It has nothing to do with forecasting. It's just saying that given these parameters, right, that happened over the last 100 times, that's happening today, it rained 70 times, right? So statistics are actually a look back into the past. So when someone says to you, there's 70% chance of rain, they're just telling you what happened in the past based on the current atmospheric conditions. And this is important to know about statistics and important to remember because we'll be talking about these today about this very, very important page that I'm going to show you. When you click on this little world icon on the Autochartist Expert Advisor, it comes up with 2 links. I'm going to ignore the first one for now. I'm going to focus on the second link over here, which is called Performance Statistics. And when you copy and paste this link into a web browser, you get a page that looks like this. That's called Performance Statistics. And so you see lots of cool numbers here. 70% on indices, 75% on Forex, 80% on cryptos, blah, 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 blah. And we'll click into each one of these. Remember, very, very important. These statistics, they measure what happened in the past. And that's why people always tell you what happened in the past may not happen in the future, right? So even someone says to you, there's 70% chance of rain, it doesn't mean there's going to be rain tomorrow. Okay, so always remember that. I hope I've made that clear, and at least I hope I've taught you something about the weather. Okay, the business of weather prediction. I hope I've made up for being late. So you can tell your kids what it actually means. So, needless to say, this is very, very important, this page, because what we do is we're going to dig into some of this, right? And how we're going to do it is, let me explain to you first what we're doing. So let's just say, what am I on here? I'm on Euro USD daily pennant. Okay, so I can see that I actually clicked on this button over here, Euro USD daily chart. It's a bearish pennant. So let's go have a look, see on the stats, how well this has done in the past. Let me click on the stats. I'm looking at Forex, right? This is a chart pattern. You should have learned that from last week. So let's look at the history of chart patterns. Over the last 1 year, we identified just under 33,000 chart patterns, of which about 21,500 hit their target level, right? That means 21,500 of those things hit the little gray box over here, right? That is on average 66%. But now let's dig in a little bit deeper, right? We're looking at Euro USD. Okay, so let's try and find Euro USD. Here it is, Euro USD. So on Euro USD, over the last 1 year, we found 785 of them, of which 521 were correct. That's a 66% average. We're looking at pennant. Pennants, we identified 2,700 of them, of which only 1,400 hit their target region, 54%. Bearish patterns, again, 65%. So I can see that from those few things, should or shouldn't I be following this pattern, right? You can make your own decision. Looks like on average, it's about kind of 65, 66% hit rate or probability for this specific pattern. Okay, let's look at something else. Let's look at a Euro odd falling wedge. Okay, should we be following this pattern based on past performance statistics, right? That's the question here, past performance stats. Should we be following this? Well, have I stopped sharing my screen? Can everybody see my screen again?
Okay, yeah, we can see it now.
Oh, that's strange. It literally just stopped sharing my screen. That's weird. That's a bit of a glitch, isn't it? Okay, anyway, let me just bring up my questions and answers and Q&A. I can see my Q&A. All right, good. So should we be following this Euro odd daily falling wedge? Let's click back onto our stats. Let's look for falling wedge. Falling wedge, 64% of the time hit rate over the last year. Euro, let's look for Euro odd. Euro odd, here it is, 62% of the time hit rate over the last 1 year. So am I going to take this trade? I am not entirely sure. I'm not entirely sure. Let's go back to the stats and actually see which stuff performed really, really well over the last 12 months. So ascending triangles, descending triangles, channel downs, channel ups, double tops, double bottoms, the ones in green, head and shoulders, inverse head and shoulders have done really, really well. Similarly, we can see that by far the best performance from a symbol perspective have been odd Swiss franc, CAD Swiss franc, etc. Now, it doesn't mean that you look at this thing and you say, hey, no, the stats are too low. I'm not willing to make this trade decision, right? You could really like it. Your view on the euro could be bullish. You might say, actually, I think the euro downward trend has stopped. Let's say the European Central Bank is going to raise interest rates, and I think the euro is going to get strong again. There could be other reasons why you think this is going to go up, right? So I'm not telling you not to trade it, but I'm just telling you from a historical perspective, this is something you want to look at. You want to look at these past performance statistics to see what you like. So for example, let's just say we looked at those descending triangles and ascending. Those were doing really, really well before. So you can see over here, actually, we realized this one too late. We're a couple of candles too late. This would have been really, really good to trade because this one, the descending triangle, did really well and almost hit our target region. Now, let me skip through all this stuff, and I'm going to really skip to the real meat of the statistics page. You can look at these stats because these are for technical chart patterns, right? Now, the stats start getting really high when you look at key levels. First, let's look at these breakout key levels. So how do you get to those in Autochartist? You untick everything and you click on breakout key levels. Let's see if there are any breakout key levels right now. Okay, there are some breakout key levels. Let's look at those breakout key levels and what they look like. Okay, so this one, first one on GBP USD 4-hourly chart, support bearish. Let's look at the stats. Let's look at Forex key level breakouts. So I'll click on that. I forgot, what did we say that was? GBP USD 4-hourly. Okay, GBP USD 4-hourly. Okay, so over the last 1 year, all predictions on GBP USD relating to breakout key levels hit their target level 77% of the time, right? This is pretty good. That was support 76% of the time, bearish 76% of the time. So think about that carefully. If you're prompted with two potential trades, one that was historically 62% of the time was 66, this one's something like in the mid 70s, which one would you follow, right? So the stats are definitely in your favor, right? Again, disclaimer, past performance might not be indicative of future performance. So it might not happen, but certainly there's a higher probability based on historical empirical evidence that this support level GBP USD would go down to this target region. Now, let me give you some of my experience based on the last 20 years of experience I have with technical analysis. I have found that the best performing types of trade setups for technical analysis are actually not dependent on whether they're support resistance or whether they're chart patterns. The best ones for me are ones that have a component of a horizontal level. And let me show you what I mean on the stats page. Obviously, for key levels, everything is around these horizontal levels, right? But when you look at chart patterns, an ascending triangle, I'm going to show you what that looks like. An ascending triangle looks like this. There is a horizontal level on an ascending triangle, and look at the stats. A descending triangle looks like this. It's a breakout through a horizontal level. Double tops, double bottoms, they look like this. Horizontal levels, double bottom. Another horizontal level. Head and shoulders and inverse head and shoulders. They look like this. Head and shoulders. These are horizontal levels. Inverse head and shoulders. Again, horizontal levels. Again and again and again. Yes, there's the odd exception, like these channels, for example, etc. But in general, I have found over the years that the trade setups that have to do with these important horizontal levels perform really, really well. And that's something that you have to keep in mind, not even if you don't use Autochartist, right? If you just use your eyeballs, right? And you look at a chart, let's choose a chart I haven't looked at. Something like, here we go, something like GBP JPY. If you look at this chart, you say, okay, where are the horizontal levels? Okay, something around here, right? You can see that GBP JPY touched this support here at these levels over here, moving towards this line. I would say that if this line breaks through, there's a high likelihood that you'll see even a short movement of GBP JPY short, right? Okay, that's just because of my experience in the past. It looks like, and not only it looks like, but it seems to me that even when you read the newspaper, whether you read the Wall Street Journal, the Financial Times, anything like that, you hear things like, oh, gold has broken 1600, right? Or gold has bounced off 1900, or the Dow has broken 40,000, right? Always in market commentary, people are talking about these horizontal levels, right? Or very, very important numbers. Sometimes they're round numbers. Sometimes they're these key levels, as we're showing with Autochartist, right? So whether you're using Autochartist or whether you're using just your eyeballs to find these levels, right? You'll find again and again and again that these horizontal levels are really good performers. Now I'm going to take a step back and I'm going to explain to you what these numbers actually mean, right? Because some of you might be thinking, oh, wow, I see an ascending triangle, I'm going to make a 72% profit. No, that's not what it means. Let me tell you what the 72% means. It means that in the last 12 months, we identified 1,377 ascending triangles. 996 of them hit their target level. 996 is 72% of 1,377. So what does it mean really when we say something is correct? What does this mean? 996 were correct. Let me go back to my MetaTrader and show you what I mean by correct or incorrect. Let's go back to this first opportunity here on New Zealand dollar. So correct means hit. Oh, let me not do that. Let me draw it in a different way. Correct means hit this target level. That means in the past, what we do is we monitor all those trading opportunities, the trade setups that Autochartist identifies, and we monitor the movement of what happened to these price graphs, whether they went this way, whether they went this way, whether they did nothing, etc. And so we counted that 72% of the time, for ascending triangle, 72% of the time, the price hits this level, right? Hits this level within one pattern length, which means this is the start of the pattern, this is the end of the pattern, this is the pattern length. So if we map the pattern length, it hit that target level within that period of time. Okay, so for this flag that we're looking at, the flag, this is NZD USD flag. Let's see what the stats are. 66% of the time we hit our target level. That means that this pattern with a breakout over the last 12 months only hit its target level 66% of the time. Look, 66% of the time is still a lot. I use the word only because I compare it to statistics like on the key level breakouts, 75%, right? Which is really, really high. Okay. So 66 still is pretty darn good, right? Okay, it's still pretty darn good. But the last one I want to show you, which is the one that all of you are looking at. Ilan, why aren't you telling about this one that says 80%? Why are you avoiding that one? Okay, so I'm not avoiding it. I'm coming to it. Okay, so let me show you how to get to those that say 80% on MetaTrader. You click on the filter icon. You untick everything except for approaching key levels. You click on approaching key levels. Right now, there's only one of them for my list, for my market watch list. Okay. If you increase your market watch list, there could be more, right? There could be many more emerging key levels. Now, as you know, emerging key levels from last week's webinar are the levels where the price is still moving, the current momentum is still in that direction towards this level. So Autochartist identified this blue line as an important level on the Australian dollar. And you can see it did a pretty good job. It hit that level here, 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 broke through, became resistance, again over here, again over here. I think Autochartist did a pretty good job to identify this as an important level on the Australian dollar. And now the price is moving there. Again, the current momentum is in that direction. So what Autochartist is telling us is that if we have a look at the stats on the emerging key levels, what was that? ORD USD. On ORD USD, those type of emerging key levels hit their target region 81% of the time. Okay, 81% of the time. Now, should you blindly follow this? The answer is always no, and not only for these emerging key levels. Let me explain to you actually why I believe these emerging key level statistics, although they're factually correct, I think they're a little bit skewed. Let me explain to you why. What I'm going to try to do is I'm going to try increase the my data intervals as well to see if I can get any more examples. I've got a couple more examples. And let me show you what the problem is with these key levels. These key levels, okay, sometimes they're very, very close to their target. Okay, so this here is only a few pips. All right, this is a 15-minute chart, right? And a lot of time, although the price hits this target level, it's sometimes hits it because of noise, because the price only has to move a small amount, right? When we compare this to, let's say, the completed chart patterns, let me find something. The size of the forecasts for the chart patterns are much, much bigger, right? Whereas the size of the forecasts for the emerging support levels are actually pretty small in general. So are these statistics wrong? No, these statistics are right. They're factual, right? We're trying to create transparency for you. But it's important for you to remember that if you do trade these emerging key levels, you can't just, open a position in the market and then, leave your trading terminal. You have to stay on top of your trading terminal. You have to watch it very, very carefully. And most importantly, when you open up your positions, make sure that the spread, the amount of money that you're losing on the spread, isn't eating away all of the potential profits of the trade itself. Okay, so just keep a very, very close eye on the actual amount of potential profit that you have in these emerging key levels. Okay. I've said enough about the statistics. I need you to go play with them and look around at them. Again, remember the way to get to them is to click on this little world icon, to copy and paste this performance statistics link into a browser. Okay, and that's how you get to the performance stats page. Now, for those of you who are maybe have a little bit more experience, slightly more experienced traders among you, you might say, actually, Ilan, I'm not really interested in the statistics. I'm more of a hardcore technical analyst, and I want you to teach me what, in your experience, have been the most complementary indicators when trading technical analysis, chart patterns, and support and resistance. So let me talk about that for just a moment. I see a lot of people raising their hands. Guys, please ask the questions into the Q&A panel. Oh, I see I did get some questions. Let me try and answer one question here from, oh boy, I'm going to mess up this name. Oko Raufor. I hope I haven't completely botched up that name.
It's Okafor.
Okafor, sorry. Thank you.
Yeah.
Thank you, Manuel. That is so embarrassing. So Autochartist doesn't cost anything. I'm not trying to sell you anything in this webinar. Autochartist is free. If you have a live account at Kwakol Markets, just go to the webpage, download the plugin, and if you have a live account and you log into your MetaTrader, the thing will know and will give you permission to use it. It doesn't cost you anything. How do you get the software? Let me just repeat that quickly. You go to the Kwakol Markets webpage, you click on Trading, Autochartist. You click on Download Plugin, and then you can click Download Plugin again, and it'll actually download the software for you. Okay, then you just run through the installation process. Real easy. Okay. Francis, you've raised your hand, but I don't see a question from you. And Nathan, I don't see a question from you either. So please go ahead and ask your questions, because I see you've raised your hands. Now I'm going to get a little bit more hardcore with all of you. And I'm going to speak about what are the best indicators to use alongside chart patterns and support and resistance levels. So what I did there was I selected the completed or breakout chart patterns and the breakout key levels. And if you remember from the previous webinar, I hope you go back and watch it. The breakout patterns are the ones that tell us there's a new trend to come. So when you understand the concept of what is a breakout is a new trend to come, you know that you should not be using stochastics or oscillators in conjunction with breakouts. If you're looking for breakout opportunities, you're probably a trend trader, in which case, what you need to do is you need to add trending indicators. For example, the real easy one that we all know, a moving average. How would you combine a moving average with a technical chart pattern? Real easy. Is the moving average line pointing in the same direction as the breakout? If you're wondering about that, I'll zoom in for you. It is not pointing in the same direction as the breakout, right? So taking this trading opportunity is basically telling you that you have one technical indicator pointing this way, another one pointing this way. Too confusing for me. I'm not sure about the rest of you, but very confusing, right? If you start looking at, again, this one here, breakout, going long, moving average, definitely the trend is short, right? So again, not sure about this. Let's look at this triangle over here. Ah, Okay, now we've got something. We've got a trending moving average, and we've got a breakout pointing in the same direction. Now this is something I could live with, okay? Because now you have two indicators pointing in the same direction, right? The same is valid when you start looking at emerging patterns. So let's look at what emerging patterns look like. Emerging patterns are, let me zoom out a little bit, are patterns that trade the up and down swings in the market, right? So then this means if you're looking at these emerging patterns, it means you're not a trend trader, you're a swing trader. So why are you looking at a trending indicator? When you're looking at swing movements, you should be looking at oscillators, right? And how do you use oscillators? So for example, the one we all know, the easiest one to understand, the relative strength index, the RSI, right? So let's look at this example over here. Let me erase my drawing objects. When the RSI was quite high, you can see it over here. Interestingly enough, we met our high, we met our 70 line on the RSI. Same thing over here, right? Look at the low line on the RSI, on the turning point, quite low. So what is this RSI telling us? Okay, it didn't quite hit the line, but it said to us that AUD USD over here hit kind of a high, and we've got two supporting indicators. We've got a supporting indicator as Autochartist telling us there was a turnaround, and we have an RSI telling us that it was on a high, and we're expecting it to go down to this level over here, which might be somewhere over here, right? So again, you got two supporting indicators, right? Telling you, this is an interesting opportunity, right? Potentially a swing opportunity. And if you remember last time what we said, these emerging patterns can be pretty challenging to trade. So what you could do, three trading styles for this. You could trade the short position right now, down, or if you're going to wait for your RSI to hit around 30, what you should be doing is setting a buy limit order. So if the price hits this level, if you think it's going to turn around, you'll be in the market immediately, right? So again, I really, really want you to go watch the first webinar that explains the difference between emerging patterns and breakout patterns. It's really, really important to understand this difference. These emerging patterns are quite powerful in that they give you almost a warning of what potentially could happen in the market. So you can use stop and limit orders to kind of be proactive in the market instead of reactive in the market, right? So the information I want to leave you is, if you're a trend trader, you should be looking at the breakout patterns in conjunction with moving averages or any other trending indicator that you like. If you're a swing trader, you should be looking at the emerging or approaching patterns using oscillating indicators like the RSI or the stochastic, okay? I see I've got some more questions coming through. Yes, Malik, this recording is definitely happening, and the guys at Kwakol are going to communicate the recording with you. So, wow, I'm getting a really good question over here. Okay, so I'm going to try and not kill this name again. Ayodeji, I hope I got that right. So Ayodeji is asking, what time frame would you recommend with Autochartist? When people ask me that question, and believe me, you're not the first to ask that question, I want to say that there's no specific time frame I recommend from a trading perspective. What's important to keep in mind is your lifestyle. If you trade in the morning and then you go out to take your kids to school and meet your girlfriend or boyfriend for coffee and then lunch, and you can't watch the market, then what are you doing trading 5-minute or 15-minute setups, right? Trade hourly or 4-hourly or daily setups. If you're like me and you've got your trading terminal open the whole day and you're watching the markets, then go ahead and trade the 15-minute trade setups. But you must remember that it's lifestyle as well as size of opportunity, right? So the daily trade setups that Autochartist gives you sometimes have hundreds of pips of trading opportunities, right? You have to trade smaller volumes. We'll discuss that next week. Long term, right? There's going to be fluctuation, so you can't trade too much on the trades because there's going to be noise and fluctuations. Short term trades, very small potential profit, same amount of risk, right? So you have to really watch the market. So I really want you to start thinking about risk and lifestyle when it comes to timeframes rather than profitability, right? And potential for profit. Okay. Okay. So there is somebody on the call here. It's called Intelligence Tam. Intelligence, is that your name? Was that your group name? Okay. So anyway, Intelligence, the way you get the Autochartist mobile app, I haven't really discussed that. I may discuss it next week, but it's the same information again as you get on the Autochartist MetaTrader. You open your Google Play Store or your Apple Store, and you search for the word Autochartist. You download the app, and there's a big green button that says log in using QR code. In fact, it's the only way to log in. You click that button and your camera comes up and you just scan this QR code. What I'll do is next week, if I have time after talking about risk management, I'll show you how to do that, but it should be real easy. Okay. Okay, so we've got a question from Aaron. Can someone use trends in conjunction with IFCs? Sorry, Aaron, can you tell me what IFCs are? Or maybe that's LFC? Could you just elaborate on that acronym that you used? Joseph asked a great question. What is the average risk reward ratio using various patterns? So great question. This has to do with the statistics. So Joseph is asking risk reward when it comes to, I guess, these statistics over here. So let me answer that question quite simply. There is no risk reward because these statistics do not take into account any type of stop loss. So let me explain what that means and why that is. Let me just quickly get some breakouts and show you. And I'm going to close my RSI. Okay. So when Autochartist provides you this trading opportunity, we are not financial advisors. So number one, we cannot give you a stop loss recommendation. Okay, that wouldn't be legal. Number two, even if we gave you a stop loss recommendation, we might say a fixed stop loss. Personally, the way I trade is I look at the previous turning points, and that's where I set my stop loss. And we'll talk about that next week around risk management. But some people trade a moving stop loss or trailing stop loss. Other people use a parabolic SAR as a stop loss. Other people use a fixed stop loss without turning points. There are literally, I've even seen people using moving averages as stop losses. There are literally dozens and dozens of stop loss strategies. So our business is not in telling you, what the stop loss is, or anything like that, or to prescribe a strategy. All we measure, Joseph, to be clear, is how often we hit our target level. Next question, which I know you want to ask. Of course, there are times when we hit our target level, but in the meantime, the price did that, right? And so depending on your stop loss, yes, you would have got stopped out and you wouldn't have made a profit, right? All we're saying with our statistics is within a certain time frame, what is the probability of hitting this region? Okay, it is not about statistics or risk reward ratios. I hope I'm making myself clear. So Okarafor again is asking, please can we have the QR code to scan the mobile app? You just need to install the Autochartist plugin, drag and drop the expert advisor, and then click on this. Oh, sorry, not that one. Click on the mobile app. That will give you the QR code that you scan and sign in. Okay, so it's as easy as that, guys. Can you trade it with institutionally funded candles? So that's what Aaron is saying. Aaron, can somebody use trends in conjunction with institutionally funded candles? So Aaron, I'm not sure what you mean by institutionally funded candles. You mean candles that are that show large movements due to large institutional trade, right? Is that what you mean? I'm guessing that's what you mean. Well, for me, liquidity is liquidity. I don't really see a difference between retail liquidity or institutional liquidity. At the end of the day, sometimes your broker would offset your trade against other trades at the broker. Sometimes they would be the counterparty. Other times they would send it up to a bank and trade against the bank. So really, for me, I look at liquidity as liquidity. I don't really care where the liquidity comes, to be completely honest with you. So can you use trends with institutional liquidity? I absolutely think you can. Yes. So Abiola is asking, can this be used on synthetic indices? Interesting. Abiola, do you have a synthetic index specifically that you want to ask me about? Maybe you can give me an example. Are you talking about something like a VIX volatility index, or what exactly are you saying? Okay. While I wait for the Abiola to tell me what he means by synthetic indices, I will answer another. Okay, Abiola's saying like VIX 75. So to answer your simple question, I would not trade using technical chart patterns or technical analysis for volatility indexes. So Abiola is asking, can you use this for synthetic indices like the VIX? VIX is a volatility index. I would not trade TA on VIX. However, regular indices like the Dow or the Nasdaq or the S&P 500, those definitely can be traded using technical analysis. Hialema Ada, wow, I hope I got that right, is asking, can we explain emerging patterns with oscillator moves in terms of swing trading? Sure. So let me show you what I mean by swing trading. So this is called an emerging pattern because it has not yet broken through the support level or the resistance level. It means that the price of the Australian dollar is still trading within this range. Okay. Now, swing traders look for opportunities like this, right? What they're doing is they're trading these types of swing movements between support resistance. Trend traders are the opposite. Trend traders trade the long-term trend. So for example, a trend trader would wait until this price breaks through support and then trade a long-term trend short. So when it comes to swing trading and trading these market swings, you cannot use, by definition, you cannot use trending indicators. You have to use oscillators, because oscillators are the ones that tell you whether something is overbought or oversold. If you look at the definition, for example, of RSI, the same thing for stochastic, same thing. They will tell you when something is overbought and oversold. It's the same thing. It's exactly analogous to emerging patterns. We're trying to look for overbought and oversold levels. Okay, I hope I made a little bit clearer. Okay, guys, I want to answer a ton more questions, but I'm out of time. I'm so upset with myself that I tried to get in on time, but I went to the wrong webinar. And there was no one there waiting for me. So I'm really sorry about that. Now, I really, really, really want you to join me for the next webinar. And on the next webinar, it is, I promise you, the most important and best webinar you've ever attended. We're going to talk about this thing called the Autochartist Risk Calculator. It's got everything to do with position sizing, how big positions to take, where to set stop losses, specifically around position sizing and market volatility. Please join me next week, same time, same day of week. Join us for this webinar. I promise you it's going to change your life and the way you trade. So please join us for that. And what we'll actually be doing in that webinar is we're going to be placing some real live trades. Hopefully not lose too much money with the risk calculator, but you'll see me trading live in the markets. It's going to be super fun. Okay, and I think, didn't you guys want to run a little quiz? Emmanuel, let me stop sharing my screen. I remember you guys wanted to run a quiz today.
Yes,
Yakubu?
we are going to have a quick quiz here. So,
cool. Do you want to do that?
Yeah, so we'll just simply send the link on the chat box. Everybody check your chat box. I'm going to send you the quiz. So we'll have our quiz real quick.
And I believe there's, have you guys got prizes for the quiz or something, Emmanuel?
Yes, there's a prize for the quiz. Yeah.
Oh, awesome.
So yeah, the link for the quiz is on the chat box, guys. So we can just
cool. I'm gonna click on it too, but I won't participate.
Okay, the second one. The first one is for people to sign up on Kwakol Markets. The second one is for the quiz.
Right, the one that says formed.typeform.com.
Yeah, Typeform.
Cool. Okay, Emmanuel, I'm gonna take the quiz along with everyone, but ignore me because I'll probably get them all right. Okay.
I think we're having more questions on the chat box.
Okay, so should I answer those? Are you okay for me to answer those while while people take the quiz?
We can answer both. We can do that.
Okay.
Okay. For the link for the next webinar, I'm going to share with you Kwakol Markets Telegram channel. there you're able to get updates on everything we do concerning education in Kwakol Markets, our webinar schedules, our trainings, everything in between. And also, if you signed up using your email, you're going to receive an email next time we'll be having webinars as well.
So Emmanuel, I think you sent that link to only the hosts and panelists. So what I've done is I've copied and pasted it and sent it to everyone. I hope that's okay with you.
Okay, yeah, that's fine. That's fine.
Good, because everyone was basically saying they can't see anything in the chat window, but I think people can see things in the chat window now.
Okay, I didn't know. I didn't notice that.
Yeah. Okay. Okay, but this, okay. Oh, here we go. Oh, I see. There's a lot of questions about me as a person first. And then there's a quiz. Got you. Is everyone doing the quiz? I hope so. I know I'm doing the quiz. It's quite a difficult quiz.
Okay, I think that's about it. We are done for the day. So anyone who's taking the quiz, once you're done, just submit and the winner will receive an email.
That's super fun. Thank you. I'm enjoying this quiz. There's a funny one.
Okay.
What does a breakout pattern refer to? My cousin breaking out of jail. I like that one. Okay, I like that one. Thank you.
Okay, so everyone also follow us on our social media handles on IG, on Twitter, on Facebook as well. We're going to announce the winner for the quiz there. And so we'll catch you guys next week, Thursday, 8 p.m. same time. And
I promise I'll be on time. Thanks, Emmanuel. Thanks,
problem.
Akubu.
All right then.
Bye, everyone.